See, I had the opportunity to work with an insurance company, large insurance company, for several years. And by virtue of consulting with the C-suite and the senior management, I got this first-hand intimate feeling, that the knowledge about how the company worked inside and how they responded to changes demanded by the environment. See, when you work in such close proximity, you get to see the challenges, the struggles, and the tools that they build to respond to changing customer needs. But then we also are talking about the pressures brought on by the environment. So inside out as well as outside in. So that is the knowledge that I was privy to by working at that level. And so that's given me some pretty unique perspectives in how I look at the insurance industry. It's a huge industry. So it's pretty ripe for disruption, and I think it's happening, and the pace will quicken. See, the pace of change in this industry hasn't been as rapid as in some other industries, which is understandable. Now, that having been said, the pace is starting to quicken. There are more things starting to happen in the insurance industry, and in the coming years, the pace will quicken, and you're going to see a lot more changes. But if you really ask me the reasons why there hasn't been so many, I could think of three reasons. The primary one being, that is the nature of the business. Now, insurance is all about what? Minimizing risks. So that is what the insurance industry promises to the customer: minimizing risk, minimized risk. Now, the insurance industry embraces that philosophy, and that is one of the primary big reasons why there hasn't been any major disruptions, number one. Number two, from a consumer perspective, now what is the tangible benefit, the touchy-feely things that the consumer feels on a day-to-day basis? Now, if I own an auto insurance, there is nothing touching feeling, there's nothing tangible that I get to feel on a day-to-day basis. Now, if my car gets into some trouble, some problem, some crash, then I go to the insurance industry and it covers the cost of the repair. My house gets into some problem, like they cover the costs. But outside of that, there is not a whole lot of tangible benefit that the customer feels. Now, the third reason, one of the big ones, is it is one of those low touch point industries. Now, how many times do you go and interact with your insurance company or the broker or the agent? Not very many times. Now, unless there is a major live event, you don't go to your insurance agent and ask for any radical changes, which means years could pass before you even make a contact. Otherwise, you are cutting a check after check after check, year after year, and you don't even get to interact with your insurance company. So these are some of the major reasons why the rate of change hasn't been as quick or as big as in some other industries. But like I said, it is changing. You're going to see a lot more changes in the next few years than what you have not seen in the decades before. See, a number of factors will drive the disruption in this industry, a number of them. Now, if I have to recall a few, the number one thing will be what I call the big data phenomena. See, for years, insurance companies have collected volumes upon volumes of data, and today, even every customer that comes in brings with him or her tons of data. Now, so today we have the capability to process the data, we have the software tools to process such data, and that will result in an entirely new set of insurance products and for specific customer segments and demographics. So big data, number one. Number two, the whole notion of the shared economy. Now think Airbnb and Uber, those two classic examples, if I can quote them. Now they will bring in a whole new set of issues and policy changes, and as a result, new kind of insurance products. Now, the classic example is, say, Uber for that matter. Now, the person who owns the car, now when he is driving alone, he has a specific type of insurance. Now, in this case, his own regular auto insurance. Now, the moment he takes on a passenger, the equation changes. See, now he has to go have and cover for the extra risk of having an additional passenger in his car. So which means he needs one type of insurance when he is traveling alone and another type of insurance when he or she is taking on a passenger. So this hybrid, the need for a hybrid insurance will drive some of the newer products. Now, newer products are starting to occur, but then disruption around the shared economy type of insurance products will kind of drive this industry in the next few years. I mean, if you extend the same thing to Airbnb, you can start to imagine the amount of disruption this will drive. Now, the third big one is this whole concept of self-driving cars. Now, that's a whole different ballgame that will introduce a whole new set of issues and questions and policy changes, and as a result, a new set of insurance products. Now, think about the questions that are being asked today. Now, if a self-driving car gets into some kind of a crash, what happens? Who pays the insurance? Now, is it the person who manufactured the car, the company that manufactured the car, or is it going to be the person who owns the car, or is it going to be a third party, and will this third party be the insurance company? So these kinds of questions, as they get answered, will give rise to disruption, and companies built around this disruption, newer products will come into the picture. See, this is going to be a big shift. The whole concept of the business model change that I am starting to see, and which I'm thinking is going to, the pace is going to hasten rapidly, is what used to be a B2C, from an insurance company to a consumer, business to consumer, B2C, will now evolve into a B to B to C. Insurance company to a third party intermediary, like a big box retailer, to a consumer. So a business to consumer relationship is going to be a big driving force in this industry. Now, classic case in point is Walmart. Walmart is now starting to give its own insurance products. And in some cases, big box retailers are tying up with insurance companies to start being the intermediary, selling the insurance products of this insurance company itself. Now, the Walmarts, the Tesco's, the Carrefour, the Alibaba, all these companies will now start offering insurance to their consumers because they already have an existing relationship with the consumers. Consumers interact with them more than they interact with the insurance company. So there is a higher need both for the big box retailer as well as for the consumer to buy the insurance products from the intermediary than from the insurance company, because there is a higher touch point between the consumer and the big box retailer than between the consumer and the insurance industry. So that, in my opinion, is going to be a big driver, the change in the business model. See, there are a number of reasons why I think the intermediary will be a big player in this whole B2B2C game. And I can think of a number of reasons. Let me demonstrate with an example. Say, take Walmart. Now, if I happen to go to Walmart week after week, and I start buying, say, pet food all of a sudden, 2-3 weeks later, Walmart can make the reasonable assumption that I own a pet. Now, as a result, Walmart now has the data about me and me owning a pet, so which means it can now start selling me a pet insurance product. Now, this is a piece of information that the insurance company does not have. So there is no way an insurance company can sell a pet insurance to this family at all. Now, for one, the family may not even want to buy pet insurance, may not have even thought about pet insurance as a possibility. Or two, they might have said, hey, I saw a fancy insurance product for my pet in a pet magazine, which may not be their own traditional insurance for the rest of their life, for their car, for their life, for their health. So rather than lose the family, rather than lose the insurance policy for their pet, they would rather have the intermediary satisfy that need. So that is why I believe the intermediary will play a larger role, number one. Number two, if you look at it from the intermediary's perspective, they would love to own the customer for life. The value of the customer for life is a big deal because they already are selling grocery, taking about Walmart. They're already selling other home goods. They're already selling beauty products, manicure and pedicure. They're already selling photography services. They're already selling auto services like car repair and other things. And they're also selling pharmacy services. So why not insurance? So now, from the consumer perspective, if I can get everything under one roof, now I don't have to go to 3 different places to get 3 different jobs done. So for the big box retailer, it is value, the life value of the customer. And two, for the consumer, it is getting everything done under one roof. So the consumer is now willing to trust the intermediary for more than just groceries. So this will be a defining shift, a big mind shift in the whole disruption that will happen in the insurance industry.